Welcome to the 2026 Dialogue, a masterclass series by the HR Association of India. I'm Neha Jugnani, and today we are exploring a shift that is redefining how finance function evolve, adapt, and create value in a rapidly changing business environment. Our theme for the session today is Future Ready Finance, Automation, Digitalization, and Process Transformation. To explore this transformation, we are joined by Vrudang Parikh. Vrudang is a company secretary and chartered accountant with over a decades of hands-on experience in finance leadership, governance, and compliance. As CFO of Jade Lifestyle India Limited, he partners closely with the businesses to drive strategic growth, strengthen cash flow, and build robust financial and compliance framework that supports scale and profitability. He's passionate about using data and financial insights to enable sharper decision making in fast evolving markets. Earlier in his career at Nirma Ltd, he led complex financial operations and process improvements, gaining strong exposure to disciplined execution in a large corporate environment. Vrudang, thank you so much for joining. It's a pleasure having you.
Yes, it's a pleasure. Thanks for inviting me. It's a pleasure joining. It's always a pleasure joining with HRA in any of the events or functions or anything. And I must say, HRA is doing amazing job. Like you are doing with full of energy, and the content that is getting generated will be really helpful to the future aspirants or future chief futuristic officers, as we always say. So, just want to give a small introduction. You have already done, but currently my name is Vrudang Parikh, working as a CFO at Jade Lifestyle India Limited, having 87 stores and managing more than 3 lakh square feet of retail space. So over a period of like 6.5 years, I have gone through a digital transformation from manual processes to automated and automating finance function as well as the CRM functions. So hopefully today we will cover most of the things and we'll highlight some of the important areas.
Sure. Thank you so much, Ridang, for the kind words and, of course, your introduction as well. I look forward to this exciting masterclass today. So, to begin with, Ridang, my first question is finance in retail, particularly, has traditionally been very process heavy. So, what is the biggest barrier to truly automating finance function today?
See, honestly, we operate in a retail industry in a premium menswear segment. So all 87 stores belongs to the menswear, and we do not have any subcategories like women's wear or kids wear. We are completely focused on the menswear. So technology is not a barrier in terms in the retail industry. What I believe is the data inconsistency. This is what we call garbage in and garbage out. So data inconsistency has been a serious issue. So retail flows through offline stores, online stores, warehouse management systems, productions, corporate offices. So a lot of data keeps flowing everywhere, and it has multiple formats. So their standardization is not there. So first of all, the data inconsistency is the major issue which needs to be solved. Secondly, the especially if you talk about the finance function, the resistance to change is very much higher. Normally, the finance function in an organization where the promoter based organizations are there, where manual they started with a manual thing and they are slowly and gradually transforming themselves into digitization and everything. So manual processes are always being there, so resistance to change is always there. And nowadays whenever we implement any sort of uh, technology or automation tool, the basic fear that comes within the mind of the employees that are they going to get replaced through AI or technology. But that is not the intention of any of the organizations, I believe. But the core intention is to reduce the labor work, to reduce the manual work, and to digitize, so they can add more value to the organization rather than doing the same type of work daily. So inconsistency of the data, resistance to change, and these are the major two roadblocks that I believe. And to overcome such roadblocks, we need to have a standardized SOPs. Like each and every functions must be standardized. They need to have some defined processes, and those SOPs needs to get on paper first, then we implement digitize. Because without SOPs or without processes, even if we are digitizing those things, we are ultimately digitizing the inaccuracies that are already there in the system. So I believe inconsistency, resistance, and ultimately garbage. It's all garbage in and garbage out. But preliminary, we should have all processes and systems in place, especially if they should look good on paper. Then we can implement the same in the technology.
Sure, thank you so much. Beautifully put. So there is data inconsistency, as you said, which is a
Yes,
major issue. Resistance to change as two layers is what I've understood. One is the manual work being done, which makes the
correct.
process even more tedious. And last but not the least is the fear of change, whether the job that I'm doing will be
Yes.
replaced by AI. So beautifully put, Vedang. My next question is, you've grown within the organization and now lead finance. So how has digitalization changed the way you look at financial decision making today?
Uh, Earlier, whenever we used to work, like I joined Jade in December 2019, right before COVID. So it's almost 6.5 years over here. And before that, I worked with the Nirma Ltd, as you mentioned. So the process initially, the finance and accounts used to be considered together as a same function, where finance was being limited to the audit report or doing some analysis and while giving some data to the bankers, and accounts part used to prepare the trial balance, getting the financials ready, solving out the queries. But over a period of time, both of them have evolved so much. Now, today, the finance and accounts are to completely a different segment. Like the finance is having their own set of goals. They have to manage the treasury. They are basically they have to look at the analytics. They have to consider the ROI, treasury part, and everything goes into the finance. And accounts is just, I mean, in the current scenario, it's being limited to the reporting, statutory compliances, and complying with the obviously internal as well as the statutory auditors. But over a period of time, we have grown from record bookkeeping to real-time data analysis. This is what finance function has evolved. So those days were gone where we used to, look at the balance sheet and annual report to gather some data, and we used to do the analysis on those and the balance sheets and annual report and then present it to the management. But nowadays, that thing is gone. Even the nowadays management is also not interested in year-end balance sheets. They want real-time insights so they can track those insights. They can take decisions. So I'll share one small example. Earlier, last year, we used to prepare MIS of those all 87 stores where we check the health of the store. And normally the MIS used to get prepared, used to get ready by 15th of the succeeding month. Like for example, if you are preparing an MIS for the month of April, it should be getting ready by around 15th of May as per the current processes. Because many of the things were quite manual and everything. The data entry was manual, provisions were manual. So post, I observed that if we are able to present the data on 15th of the month, half of the month is gone. So it becomes very late on the management part to take any sort of decisions when 50% of the time is already being gone. So this keeps on rotating every month. So ultimately, the real decision making either gets delayed or it might not ever happen. So what I did is we converted the entire data into a BI tool. Uh, it is not a recommendation, but the name is Martin. The entire data gets converted into BI tool. The sales, everything gets migrated from our ERP to the Smartin, and currently we are able to give MIS by max of 6th of every month. So drastically from 50% of the time lag that was happening, we have reduced it to around 20, 10 to 15%. So, and currently we are able to present the data or MIS on 6th of everyone, where we are able to give real-time insights. It's not just P&L, that what is profit, what is loss. We're able to give them category-wise MRP sales, category-wise gross sales, category-wise discount outflow, category-wise COGS, what is the stores, what are the store operating expenses, what is the store EBITDA. So these are the real-time insights, and this helps organization to check the health of the store, whether the specific store is performing or not, whether we need to close down the store or not. Earlier, what used to happen when we used to present only PNL, whether the store is making loss or whether the store is making profit. So ultimately, the decision used to be whether we want to continue the store or we want to close it down. But it is not like that. Sometimes we need to continue the store even though we are incurring losses, because the future looks good. The payback period looks good. So based on that, the digitization has played an important role. Second example will be of a CRM software that we have implemented, where we have entirely migrated the manual process into a CRM software. It is a US based AI software that we are using. So real time insights we are getting, where the customer's behavior, each and every customer behavior is embedded into the software. So going forward, for example, if Vrudang goes for shopping in a Jade Blue, so the store is already having a data. Okay, what type of garments Vrudang is always purchasing, whether he is purchasing in the time of sale, whether he comes in the month of April, May, where the fresh sale is happening, whether he is He always buys what kind of color he prefers, checks, solids, and everything. So this has helped us a lot. And initially, it has improved our marketing ROI by at least 4 to 5%. And currently, each and every store is able to get those insights. So, and be able to track those customers. And based on that data, we are able to generate the predictive analysis for the next year, where we can get insights about the net sales, MRP sales, gross sales, and based on that, we can do the inventory planning. So the finance function has evolved so much that it is not limited to accounts and everything. Now the role of CFOs is spreaded across. I mean, it is going beyond finance or accounts. It is related with operations, planning, as well as manpower planning and production and everything. But without digitization, you cannot have such type of insights. So you need to get uh, into the technology part in order to evolve.
Sure, beautifully put, Vrudang. So you started by saying that about 6 years ago, or the time before that, finance and accounts used to be looked at with different lenses. I mean, they were together, but now it has evolved so drastically. Also, used to be mostly the record keeping function, but now it is.
Correct.
It keeps the business framework in mind. It gives you predictive analysis. It does the forecasting for you. It not only tells you about what has happened, it helps you make those decisions based on that analysis, as
Correct.
to what future ambiguity or what circumstances will be coming in the future. Great example there by, related
Yes.
to MIS and, CRM as well to back this. So thank you so much. My next question, Vidang, is in a fast expanding retail business, how can CFOs ensure process transformation keeps pace with business growth without adding any complexity?
So there is a very, it's a Reliance is a very good slogan. Growth is life, and it is very true. So everyone strives for growth, being a small organization, medium organization, large organization. And I believe in a retail industry, growth comes from only two places. Either you need to have a growth in your stores, that is always we called same store sales growth, that is triple SG, that is a technical term which what we call. And either you have to achieve growth through by opening new stores. So normally to achieve the same store sales growth is very difficult in the retail industry, as well as the number of competition and number of brands that are evolving day by day. So you need to keep on opening new stores across cities, across states, even across countries also. But in the space of expanding, like one should always follow maximum business and maximum governance. So there is no option to like not following the SOPs, not following the processes that needs to be followed in the race of getting scaled. But in order to scale those, first we need to have such type of process audit, process like SOPs and process defined within the organization, that even if currently we are having 87 stores, and if we're going for, if we're targeting our next 50 stores in the next year, then all sorts of policies needs to be followed aggressively, be it HR, be it finance, be it accounts, be it operations. So ultimately, it boils down to standardization. When your company is standardized, the replication of each and every store becomes very easy. So anything that has been finalized, anything that has been standardized on paper, to replicate those stores becomes very easy. For example, we were struggling to have a single design for all our Jade Blue stores. So each and every store we used to spend so huge amount on capex, huge amount on designs and everything, and all stores are beautiful. But down the line, that was a journey till around 85, 87 stores. Now we are targeting around at least to add 30 to 40 stores every year. So if we add 30 to 40 every year, that means we'll be adding 150 200 stores over a period of 5 years. So this needs standardization. Our project, our design of the store needs to be standardized. The SOP of the accounts, policies, operations, HR needs to be streamlined. Then only it is able to, then only we are able to scale. Because if we scale without maintaining those policies or without following these policies, we might enter into a statutory non-compliance trap. Ultimately, it boils down to mess within the organization. Accountability, nobody would be held accountable for any sort of mishap that can happen. So scaling is not an option to, I mean, scaling is not optional, but so as the policies and SOPs are also not optional. So to scale along with the implementation of those SOPs, to have better governance should be the target or should be the road path for each and every organization. This is what I believe.
Sure. So clearly, the process and standardization is the key, especially when you're handling large scale businesses. So it doesn't add to the complexity if you merge with AI technology and make everything standardized. I think the transformation would be better. So
Yes,
thank you so much
yes.
for that. My next question, Vedang, is automation brings efficiency, but where do you think human intervention in finance will always remain critical?
See, in a finance function, especially in a retail industry, our lot of processes are manual. Uh, but over a period of time, digitization can help us to digitize the data. It can reduce the manual processes, can reduce the labor work of the employees. But what it cannot do is like a gut feeling. AI or technology cannot have its own gut feeling. It can present the data that this is it can present the data in a better way. It can reflect the profit and loss of the store. But what about the gut feeling? It cannot be replaced by any sort of technology or AI. That is from within, and that cannot be replaced. Second is the risk taking capacity of the person. In today's world, digitization or you can say AI, they can present data in any number of ways you want, but the risk taking capacity has to be done by the person himself. For sharing one example where we have a flagship store at our CG Road. It is around 15,000 square feet of store. It is a flagship store since 1995. And we, over post 1995, we opened a huge store on SG Highway Road. And it was obviously a risk. We felt that 50% of the customers will move away over there and 50% will be retained. But that was a risk we took, and we were surprised to know when we did analysis of the customers and everything, looking at the revenue that we achieved, we got 100% set of new customers over there. So the CG Road stores business was left untouched, and ultimately we got a completely a new segment, new sort of customers, a new business at the SG. So that was a risk taking capacity. And when I'm talking about 95 to 2000, where there was no AI, where the promoters were not having any sort of knowledge of AI technology, उनको तो सिर्फ धंधा करना था. So that was the risk taking capacity that cannot be replaced by any sort of technology. So technology can work wonders nowadays, but that was a different era. But I always believe the story from 0 to 100 crores is different, and a story from 100 crores to 1000 crore is always different, and beyond 1000 there is a completely different story. So now we cannot work like that. We need to address many of the factors, because at that time competition was limited players were there, the customers were quite loyal, online presence was not there. But today we can take a risk, we can take calculated risk with the help of the technology, but such type of risk is not advisable as of now, and nobody would be taking that such type of risk. Those days were gone. But with the help of technology nowadays, we can do geotagging. We can have customer data, what kind of preferences they have, what kind of taste they have, what kind of brand they are looking for, whether they are Gen Zs, they're looking for a sophisticated collection or oversized collection or everything. But that is available with the data. So based on the data can help us to take the calculated risk. Yes.
No.
So
Sure, thank you so much. Very rightly said that digitalization, while it makes the job easy, but it can never replace a human being, providing their inputs, their insights. Human beings have experience, they can
correct.
rely on their gut. Of course, data is something that helps you make smarter decisions. So if human touch and data and AI goes hand in hand, the chances of success is more sustainable. So thank you so much for that. This brings us to the last question, Vidang, which is, if you have to advise finance leaders starting their transformation journey, what is that one process that they should fix or automate first for maximum impact?
So before starting the transformational journey, they should never be in a FOMO of doing starting their transformational journey. Nowadays, everything is technology, AI. So for a new finance leaders, first of all, they should understand the process of the organization, whether the process needs transformation or not, because transformation comes with a cost. So they have to do the analysis of the whether the in what areas transformation is required, what is the cost you are ready to incur, whether you will be getting ROI, is there any light at the end of the tunnel. So there is transformation is mandatory, but it should not come from the something that is that like everyone is doing, I should also be doing. But it all depends on the complexities of the business, whether it is required or not. Mandatory, there is nothing called mandatory in transformation. So this is what I believe. But for any of new finance leader, if they want to start, given all things are in place, they should start with the sales and the inventory transformation. This is what I believe. In if you are in the retail industry, and if you look at the P&L of the retail company, the majority of the amount or majority of the slice that is being taken up by their sales value. That is because that is huge in number. So you should start with the sales, because sales is lot many parameters, like starting from MRP sales, you have discounts, you have promo codes, you have gift vouchers, you have uh, employee discounts. So lot of factors are there. So for digital transformation, we help you to sort out the revenue leakages that are taking place, what kind of policies you have, whether you have any policy of discount, how discount is getting approved, by whom it is approved, what are the limitations or what are the caps that you have kept while allowing the discount. So for a digital transformation, one should always start with the sales, and second is the inventory reconciliation. That is most important in the retail company. A lot of inventory takes place here and there. A lot of stock transfers takes place from one store to another store, from warehouse to factories, factories to stores, and everything. Lot of intercompany transaction takes place. So these are the two big areas where digital transformation should happen. Otherwise, it takes hell lot of time in terms of sales reconciliation and inventory reconciliation. Nowadays, these two reconciliations are being demanded by the auditors, internal auditors, statutory auditors, as well as from the statutory point of view. So before you standardize or before you jump into automating MIS or anything, start with the basics, start where the gray areas are there. If the sales and inventory is reconciled or it is perfectly digitally transformed, then MIS, forecasting, predictions, and everything will follow. So there is nothing wrong with that. So start with the sales and inventory, I would suggest.
Sure. So many takeaways in this one
Yeah.
for the finance, aspirant. Thank you so much. This brings us to the end of this masterclass, Vrudang. Thank you so much for sharing your insights and
Thank you so much,
experiences.
ma'am. Thank you
Um,
so much, ma'am.
you have actually reminded us, Vrudang, that finance function is not just about automation, digitalization, and AI tools, but it is a function where you rethink about processes. You enhance
And
decision making.
very true. And I would like to add you. If you are a CFO of the company, then make sure you are not a chief financial of the company. That is mandatory. That is being understood by the company that तुम्हारा finance का ही काम है, accounts का काम है. That is being said and done. So
Right.
you are not there for compliance or looking for the query solving issues with the statutory internal auditors. You are there for something else. You need to evolve. You have to predict the future growth. You have to achieve the growth, but through the lens of sustainability that can be given by only CFOs. That's why I always say CFOs are today no more a chief financial officer. They are chief futuristic officer, and they will always be there to predict the future based on the past numbers. So this is the major takeaway.
Absolutely. I'm sure the audiences will greatly benefit from this masterclass. As you rightly said, the approach, it's about making that strong foundation where you can see the sustainable growth and success. And, finance function is no longer just a function which tells you about the
Very true.
past, but it helps you predict the future and enable the business to
Very,
make smarter decisions. So thank you
very
so much
true.
for your time and insights today.
Thank you so much, Neha. Thank you so much.